Good set of numbers. Asia did well, but not as well as the rest of the region. What's the outlook for the second half? Can Asia outperform the other regions?
Asia will outperform itself. Outperforming the other regions will take us a little bit of time, but what we are doing is spending a lot of our resources and energy towards laying the foundations of a solid growth trajectory over the next 3 to 5 years.
Asia will outperform itself. How strongly will it outperform? Is there a sense of what you're looking at?
I'm kind of thinking we are about a little over €1 billion business for APAC. And I wouldn't be surprised if over the next 3 to 5 years we would be 30 to 40% growth. And the contribution of that, we could expect a very solid contribution starting from the second half going into the next year.
Anju, give us a sense of wholesale banking in this part of the world and how you grow that and what sort of percentage of the overall revenues you get from what you are head of.
So for the wholesale bank, APAC is about 17% of its loan portfolio. And about 15% roughly of income. And ING does see APAC as a growth region and a source of diversification, both from a risk as well as portfolio diversification perspective and an earnings diversification perspective.
And it's manna from heaven, surely, with the interest rates going up, that enables you to be able to make more money. So how has that been helping you?
Interest rates going up has actually helped us across the board. In the wholesale bank, our top line was up 24% quarter over quarter and about 13% year over year. And APAC is similarly going to be a beneficiary of that. We feel that interest rates are here to stay higher for longer. Unfortunately, inflation too is there to stay higher for longer. And our clients, some of them are benefiting from the current macro environment and the dislocations. Others, particularly those in manufacturing, are having to deal with what's going on from, labor tightening and supply chain and basic cost increases, but nonetheless holding fairly strong. Great client selection on our part, and our clients are able to weather what's going on.
How then are you capitalizing on the expected growth in Asia? Are you hiring more, and if so, how many are you hiring?
Well, I don't know whether an exact number is appropriate, but I wouldn't be surprised. We hired about almost 100 people in the next 12 months or so. And we've already been on that journey this year. We are investing in growth, particularly in some of the countries, Australia, Philippines. We're quite excited. We're already reasonably big in China, and it's BAU for us. So we will be investing. So this year has been a year of investments. We're already starting to see the benefits of that, and I think it will continue solidly into the future.
Anju, I mean, the last Chinese fiscal stimulus was really a bit of a damn squib, but really since then we've had this property crisis there. How does that affect what you do?
I mean, we are in China. We've got a little shy of 100 people. It's BAU for us. We are not in the property development sector. By design and by luck, I would say a bit. And, our portfolio is holding well, and we're still excited about China as a country that will present growth going forward in the future. The current lockdowns and COVID zero policy is, of course, a hindrance, both in terms of supply chain bottlenecks that actually affect all of our, or many of our clients, I should say. And it does have an impact on overall growth in APAC. But APAC as a whole we're in 11 markets. And that's the whole idea of a portfolio, where you can pick your growth spots from time to time.
Climate risk is becoming more credit relevant. I mean, how are you looking at that? How are you positioning yourself for that?
Climate risk is an actively evolving topic across the globe, and we are it's front and center for us. The regulators are all over it. Banks are interacting with each other, and peer learning is important in this space. It really presents itself in two major buckets. One is physical, the other transition, and the impact of it is it's complex because climate pathways can be various, and the impacts of those are different, and it presents itself differently in different geographies, differently in different financial products, and differently in different sectors. So we run scenarios, we identify those risks, we evaluate them, we run scenarios, we stress test our portfolios, we monitor, and we do reporting both internally and externally. And it's a journey that's going to have to continue, because despite the ambitions on transition, the climate risk is also there and for real.